Welcome to the Explainer. Today, we're diving into one of the most exciting and, let's be honest, kind of terrifying moves in trading, the breakout. We're going to break down how you can tell the difference between a genuine powerful rally and a costly trap that's just designed to take your money. Alright, let's just jump right in with a scenario that, this might hit a little too close to home for some of you. Ugh, that feeling, it's just the worst, right? That's what we call a bull trap or a fake out, and it is, without a doubt, one of the most common ways traders lose money. It literally feels like the market is just playing a trick on you. But what if you could actually learn to see it coming? What if you could flip the script and turn their trap into your tactic? To do that, we've got to pull back the curtain a little bit. We first need to really understand why these traps even happen and what's actually going on behind the scenes when a price level shatters. Okay, so the market needs one thing to move: liquidity. It's literally the fuel for the engine. And those key price levels we all draw on our charts, support and resistance, they're not just lines. Think of them as giant pools of liquidity. Why? Well, that's where everyone places their stop-loss orders. A breakout, a lot of the time, is just a hunt for those stops. It triggers a cascade, a chain reaction of orders, and that becomes the rocket fuel for a huge move. And that really gets to the heart of it, doesn't it? Breakout trading is all about trying to capture the very beginning of a powerful new trend. You're trying to get in on the ground floor as the market transitions from that boring sideways chop into a strong directional move. So let's get into the fundamentals and see how we can build this into a real strategy. Because once you understand the foundation, it becomes so much easier to separate a solid signal from all the random market noise. Think of it this way: these are fundamentally opposite approaches. A breakout trader is betting that the dam is about to break and a whole new river is going to form. A range trader, they're betting that dam is going to hold strong. You absolutely have to know which game you're playing. And this really highlights the core tension of the whole strategy. On one side, you have the potential for these massive, fast profits with super clear entry points. But on the other side, you've got that dreaded false breakout, which can wipe out your gains just as fast. So, the million-dollar question is, how do we tilt the odds in our favor? How do we build a toolkit to help us tell the difference between a real breakout with momentum and a fake one that's just designed to trap us? Well, it all comes down to two key ingredients. Seriously, remember these two things: pattern plus volume. This is your core filter. The chart pattern, that gives you the context, the story. But the volume tells you if the big money is actually participating with real conviction. First, let's look at patterns. This right here is an ascending triangle, a total classic. See what's happening? The buyers are getting more aggressive, pushing the price up against that ceiling, making higher and higher lows. It's like a coiled spring, just building up pressure for a potential pop to the upside. And here we've got an inverse head and shoulders, also known as a head and shoulders bottom. This is a really powerful reversal pattern. After a long, painful downtrend, this can signal that the sellers are finally exhausted, they're gassed out, and the buyers are starting to step in and take control. It's setting the stage for a whole new uptrend. But remember, and this is so important, a pattern is just a setup. It's not a signal all by itself. The second crucial ingredient is volume. As a rule of thumb, you want to see a volume surge of at least 50% above its recent average for a breakout to be considered valid. That shows you that big institutions are committing capital, that there's real conviction behind the move. And just look at how directly volume correlates with success. A breakout on low or even just average volume is a massive red flag. That's a potential bull trap in the making. A huge surge in volume, on the other hand, well, that's the market shouting at you that this move is for real. Okay, so we have the tools, we have patterns, and we have volume. Now let's build a clear, actionable playbook for putting them into practice. This isn't about guesswork, right? This is about having a disciplined process. So here it is, a disciplined 4-step process. Step 1, identify your key level. Step 2, and this is the most important part, you wait for confirmation. You have to see a strong price close beyond that level with high volume. Step 3, only then do you enter the trade. And finally, step 4, you immediately set your stop loss to manage your risk. You're reacting, not predicting. You're letting the market prove the move to you first. This table gives you concrete, hard and fast rules for both your entry and your exit. and having these defined before you ever enter a trade is absolutely critical. It's how you take the emotion out of the decision-making process. You're defining your exact risk and your potential reward right up front. So, we've covered the technicals, the patterns, the volume, the whole playbook. But the biggest challenge in trading, the final boss, if you will, is very often mastering your own psychology. And this is just a crucial piece of wisdom. A real breakout should show immediate follow-through, immediate strength. If the price breaks out and then just sits there, hesitating, churning, that's a warning sign. The move should feel energetic, not lazy. And these are the enemies you're fighting. That fear of missing out, FOMO, is probably the single most destructive emotion for a breakout trader. It's what causes you to jump in too early, chase bad entries, and completely ignore the rules you so carefully laid out. Your only defense is discipline. And ultimately, that's what it all comes down to. A successful strategy is only as good as your ability to execute it consistently without emotion. That is the key takeaway from this explainer. The knowledge is here, but the real test, that happens when you have to make the click in real time under pressure.